Millions of people get rich by investing in index funds. But what are index funds? How do they work? And how can you get started? Most actively managed funds have a barrier to entry. They won't work with you unless you give them £500,000 to £1,000,000 just to get started. So most people wouldn't qualify. The alternative is index funds, and you can get started for as little as £100. This video is even relevant for people who are full time employed. They don't have a lot of time to check the market every day. So they want a passive form of investment. I'm a qualified accountant based in London, and I help people deal with finances and tax. Index fund is a type of investment that tracks the market index, for example, S&P 500, Nasdaq, or FTSE 100. When you invest in an index fund, let's say you've invested in S&P 500, there are 500 companies in total with an overall market cap of $41 trillion. If you want to know more about these companies, their names, you can find a list on the internet. But when you invest, the investment fund will distribute your money in all of those 500 companies. You won't have to open 500 individual investments to be able to invest in 500 companies. When you hear in the news that the market has gone up by 1% or gone down by 1%, your investment will mirror the market performance. What it means is that your investment will go up by 1% or go down by 1%. The main advantage of investing in index funds is its low fees. There is no barrier to entry when you compare it with actively managed funds. And sometimes there is a cap as to the maximum amount of fee that you can be charged, regardless of how much money you have with them. Popular index funds even beat the performance of actively managed funds over a period of 15 years. And you can get started with a small amount of money. If you are employed and you don't want to spend too much time actively managing your investments, all you can do is you can set up a stocks and shares ISA to shelter your gains from taxes. And if you do this every year and if you stay consistent, historic data shows us that this can become a good way to retire or simply manage your savings in a tax efficient manner that can even beat inflation. The main disadvantage that I can think of when it comes to investing in index funds is that they are slow. They won't react to the market conditions the way actively managed funds will react. So if there is a crash, there is no active management to make those decisions for you. I hope you have found this video useful. Like and follow to stay connected, and let me know in the comments, what do you find most challenging when it comes to investing?